Well, the market's doing well. The sentiment has improved, but has the situation on ground improved when it comes to consumption and most specifically the quick service restaurants or not is the big question. Because earlier in the week when we did get, the update coming in from Jubilant Foodworks, the street wasn't very happy with that. The stock was down over 10%. So to discuss this space further, we do have with us Sagar Daryani, co-founder and CEO of Wow Momo Foods, and Abneesh Roy from Nuvama Equities also joining in to discuss the space, the demand, the challenges, and more importantly, what the companies are doing to diversify their revenues as well. Wow, for one, has the FMCG business, which has actually crossed the 100 crore ARR mark as well. So let's welcome Sagar first. Sagar, the update that we got from Jubilant Foodworks, was it a category pizza specific? Because there was not enough competition as well. In fact, competitive intensity has reduced. Things have improved, and the fourth quarter did not have as many gas supply issues as, the month after that. So do you think it's just a company-specific issue? If you could comment on demand at large and also the gas availability and supply right now.
So thanks, Magalam. Thanks for having me here. Firstly, I think Jubilant was quite badly hit in the month of March with the shortage of LPG, because from what I understand is that 95% dependence of LPG is what they have, right? However, if you look at, brands that are dependent on electricity, they quite thrived. So, for example, we at Wow Momo had a 25% SSSG for the month of March because all the stores work on electricity for Wow Momo. Similarly, Subway, from what I'm able to understand, had a 21% SSSG. So I believe, yes, competition was much lesser. But however, the struggle for LPG in the month of March, I think would have damaged the entire quarter quite badly for them, because even 20 days of struggle, from what I made to understand is for Jubilant, I think for every 3 stores, about 1.5 stores were operational. They had to increase the delivery radius. However, they had to let go of dining in sales. So I think that would have had a negative impact. However, that said and done, I think, consumption in QSR has been quite challenging for quite some time. And, you have to differentiate the men from the boys. I think Jubilant has done a great job in maintaining the positive SSSG. Yes, February was very bad for the entire sector. I think consumption was low. We also a very good December and a decent Jan. So I guess it all just got in together where consumption fell, and then you had this war that came in. The LPG crisis. However, March was full of a blockbuster movie release of Dhurandhar, where we saw very high dining in and very high consumption. At the same time, we had the World Cup, we had IPL beginning. So technically, I think March was a very good month for consumption as a whole. I think availability or, serviceability for Jubilant was a concern. I am not very worried. I think they're a champion company, and I'm sure they'll bounce back stronger and better.
All right, that's your view. We'll obviously ask you about Wow as well and how that has done. But Abneesh, let's bring you in. What have you made of this update, and do you believe that this is just a company-specific thing, and maybe on the sector you believe that, with availability issues improving, gas availability issues improving, the organized players having better access and the triggers that Sagar pointed out, IPL, etc., should do well for them in the first quarter?
Yeah, hi, good morning. Yes, I would agree that a lot of the SSG slowdown, LFL slowdown, which Jubilant reported flat as LFL. I would say that that's one big reason could be the gas shortage. Of course, we await clarity on how much is the impact. Even in staples, if we see most of the companies use electricity, solar, etc. I think wherever baking is involved, so that's why we have some concern on biscuits if there is some impact. Britannia did say that in the BSE update, that they have multi-fuel, so they will be able to scrape through. But ultimately, when results come, I think we'll get better clarity. But yes, I'll agree that in Jubilant Foods also, Jan and Feb were better, and March, the impact was more because of the gas unavailability. And as the geopolitical issue seems to be going in the right direction, we need to keep monitoring it. I would expect that because of IPL and because of better gas availability, in Q1 things should be better. But yes, of course, it depends upon post-elections, what is the kind of inflation in crude oil? Because that is something which petrol inflation will impact consumption overall. The delivery cost could go up, and even other FMCG will go up. So overall consumption, that could impact every QSR also, including Jubilant. But March, I think mostly it was the gas shortage in our view.
Well, Sagar, March aside and the gas shortage aside, do you see demand momentum coming back, and is that getting reflected at Wow Momos, whether that is the footfalls, in-store dining, kiosks, is that picking up, especially in light of the IPL also being on? You mentioned Dhurandhar earlier. But, besides that, are there real triggers to see a meaningful pickup?
Yeah, I personally feel I'm quite bullish. I think last financial year, we were in a single-digit SSSG. This year, as a company level, we are looking at being in a double-digit SSSG. So I do see consumption picking up. I do see a lot of reasons for consumption to pick up. Yes, I'm a little worried about the cost because, ultimately, if the cost of, like last time when the Russia-Ukraine war happened, the base price for crude oil went up, right? So the base price for LPG and the base price for other crude oil might go up. Yes, you will have to pass on the cost to the consumer because ultimately, we need to maintain our margins. However, I personally feel that, brands are innovating to a great extent. Brands are, QSR has now become like fast fashion. You have to put in new items in your menu every quarter. You have to excite the customer. The last couple of years, we saw the K-pop culture, the Korean rage picking up. Personally, going forward, I see a lot of new trends coming in. And I think the Gen Z is very experimental, right? So you catch them young and you grow with them. So personally, I believe it's going to be about hardcore execution. I think the one who executes the best is going to win. Consumption is challenging. It's not the best at the moment. But the sector, I would say, will have winners and will have people, who will struggle. And that's obviously because of consumption being slightly lower than what it was about a couple of years ago. I think the challenge in QSR has been for the last 2 years, but you have seen some brands or some companies really standing out. And I think it's because they've been like gold standard operators in the QSR space. So you will see the like I said, you have to differentiate the men from the boys. So you will see some of them really going out there and executing, and I think achieving good numbers. And I'm actually not worried about Jubilant because I think they've been a proven model over the last many years, to be honest.
Yeah. Abneesh, I also wanted to understand historically events like the IPL, which are a big demand driver. How much do they typically add to the revenues, in a particular quarter? Is it, what percentage of increase are we likely to see? Historical trends, what kind of trends do they point out to?
Yeah, thanks. Good question. All these QSRs are pan-India business. Yes, definitely IPL was also there in the base. It has been now for almost 15 years. So it's not that IPL was not there in the base. The number of matches, etc., frankly speaking, fairly similar. So I will say that it helps. So yes, in Q4 also we did have the T20 World Cup, and there were a few days for the IPL also. So that is not, I think, going to be the differentiator. It's good from a overall construct perspective, but it's there in the base also. So I would say that gas availability, that normalizing, yes, the inflation risk will be there, right? Currently, if you see gas prices are much higher than the pre-Iran crisis. So availability might be improving, but it's much higher. And second, two more things we need to see is the delivery cost will also go up, because we do expect that post-election there can be a hike in the petrol prices, etc. So how that impacts the delivery cost. And as I said, in terms of consumption and job growth also, we need to see how AI is impacting the overall job scenario in the country, how all these geopolitical issues, exports getting impacted, how that's impacting. I think those are far important. IPL is good to have as a one more tick mark, but that's there in the base also. So I will not build too much just from that, because it's an incremental, yes.
We take that point. Sagar, you said that new trends are emerging. Obviously, you've got to cater. And one of those trends is obviously mindful eating too. And the thrust that people are seeing on protein. So I'm sure some variant of protein momos or some variant of fortified food is coming your customers' way too. We'll talk about that. But the interesting part is that you've entered the FMCG space and you're doing an ARR of 100 crores. Now, this is a different muscle. You can't just obviously take the same plug-and-play model of Wow Momo and get into FMCG. How do you see synergies for that coming along for players like you and maybe some others as well? Because we've seen Jubilant Foodworks as well in the past get into, the sauces business. A lot of these sauces companies trying their hand at QSR too. So while on the face of it, it looks like there are synergies, but the execution challenges are very different, and the muscle that these guys have to, develop for succeeding in this space are different. How do you do this 100 crores, and what's your plan here?
Well, Mangalam, a good question. From a operating standpoint, if you look at the front line, it's very different. We have a separate CEO for the FMCG business. It's a separate team. It's a very different line of business. However, when it comes to product play, we've always believed that we're not really a QSR business. We believe we are a food business, we are a product business, and our goal was always to industrialize momos, right? So I think I'm a firm believer of multi-channel, like not just omni-channel. So eating at the restaurant is an occasion, which is dining in. Delivery is an occasion, and having your favorite food at home is an occasion. And a lot of people want to have that quick bite between their Zoom calls, or you fall short of food in a house party, or you have a guest coming in and you immediately need to serve. So we all have been over the years eating Maggie, right? So I think our thought process was that what can be the best replacement, possible replacement or number two to Maggie, which can be instant, which can be served quickly. And I think momos fit that bill, and that's how we got going with packaged momos, which is very convenient. It's frozen, you just microwave it and serve it and have it within 2 minutes. So the 2-minute instant momo became that hit for us, and today that's become a 6 to 7 crore monthly business. What helped us is that we didn't have to go out there and figure out what is selling, not selling. I think the best sellers in QSR, we were able to roll that out in FMCG. So I think from that perspective, we knew what the consumer preference was, and we could just go out there and execute. I think we had that added edge and advantage. And once we could crack it for momos, we did it with Kappa noodles for our Wow China brand. So, all the best sellers of Wow China were put into the Kappa noodle pack. So you have a khao sway, you have a tukpa, you have a Chinese bale, you have a Manchurian noodles. And obviously, the K-pop culture coming in, the Korean packaged noodles, which, people generally export from outside.
Right.
We've been very proudly made in India. So we were like,
yeah, we take that point, Sagar. We'll have to stop you there, not because we're running out of time, but also we are also salivating when you speak about all these things. It's lunchtime, so we're hungry. We'll let Abneesh and you go, but with the promise that both of you all join us as soon as you announce your IPO as well, which is likely shortly, I'm told. So we'll obviously get a lot of those analytical questions out too. But thank you for this appetite-whetting discussion on the quick service space. We take a short break, come back, more market fundamental stock talk.